Good morning from the For the CME. This is Chris Robinson with your Traders Exclusive comment today here, Wednesday the 31st, the last day of August. We're going to start with the grains. Tremendously negative action yesterday in the grains. You had November soybeans. We've talked a lot about the importance of the 200-day moving average. If you've been following along with me week to week, we fell below that yesterday at 965. That was a trigger for a lot of selling. As I walked over here today, we're trading around 945. We have a large crop which is getting larger. The crop tour which finished up showed very high yields. We're possibly looking at a 50 bushel yield average for soybeans, which is very large. Ditto for the corn. Corn is looking at 175 national average. So we're looking at the potential of very large crops, which is putting pressure on the flat prices. You have corn at 7-year lows. You have the wheat at 10-year lows. Soybeans are kind of the last, if you can call it strength, they're still hanging in there. At 950, 940, we're still about $1 above the highs of the year. We were back in December and January, we were down around 840, 850. So it's been an interesting year. The first 6 months, we saw a lot of money getting behind the potential of a drought. You saw soybeans rally $3. We've given back over 2 of that now. You saw corn rally close to $1. It's dropped more than that plus. And wheat, at one point, producers you could have protected above $5. We're here, around the 350 area. So kind of a dismal year for producers, especially if they failed to hedge earlier in the year. So we'll see how that plays out moving forward. What are the factors we're looking at? It's the last day of the month. The funds, what are the funds doing? Well, they're short wheat and corn. They're now short 200,000 contracts of corn, which in other words, they're betting on lower prices. They're short about 130,000 contracts of wheat, and that short is probably getting bigger. And then the final thing that we're really watching is what's going on with soybeans. The funds had been long. Around 100,000, 90 to 100,000 contracts going into yesterday's action. It's going to be interesting to see Friday when we get a commitment to traders report, and then next week how much of that long losing position they are selling out of. So that's the big question. Will them liquidating that 100,000 bushels, will that push soybeans lower? A lot of people think it may. I've seen this before where the market gets very oversold and rallies and then breaks and then rallies. So they're going to make it difficult for you to stay in that position, even though it may be right longer term. You're going to see a lot of volatility. And I'm talking about 20, 30 cent swings that'll clean out all the shorts, and then the market starts moving again. So a lot of volatility, a lot of opportunity. You just have to be very, very disciplined. Switching gears real quickly. Watching Friday, we've got unemployment report. A lot of people after the last Fed meeting think that the chairwoman may be leaning towards raising rates sooner rather than later. So Friday's report will be very important. You could see that swing through the rest of these markets. I would be watching what happens with the U.S. dollar. If it looks like the economy's doing, the numbers are good, you'll probably see the U.S. dollar rally. And then conversely, you would probably see what we've seen lately in gold. Gold, although it tried to make highs 2, 3, 4 weeks ago, it's right on the precipice of taking out $1,300. And you have a lot of the American public, a lot of the speculators out there are wrong, thinking that we were going to continue to go higher. So Friday could be a good day. You could see a lot of opportunity, not only in the grains, but also in the U.S. dollar and gold. So look forward to that. If you're looking for help with your speculation, or especially if you're looking for help with your hedging, if you're a producer, please look me up online, Chris Robinson. Have a great day.